Okay, let's unpack this. Today, we're diving deep into real estate, specifically how you can actually purchase investment properties and, build some real long-term wealth. Our mission here is simple. Distill a clear step-by-step guide, and we're going to focus sharply on the opportunities right now in El Paso and Horizon City.
Yeah, and what's truly fascinating here is how having a clear plan
Hmm.
and getting the right lender, it just makes it all actionable. It really empowers you, the listener, to turn this knowledge into a real strategy. It's definitely more than just buying a house. It's about shaping your financial future.
Absolutely. So let's jump right into step one. Define your investment goals. Before you even look at listings, you need to ask yourself, what am I actually trying to achieve here? Is it steady rental income, like that consistent cash flow month after month? Or maybe you're thinking quicker profits, maybe flipping homes. Or is the goal more about long-term equity? Appreciation over years, maybe decades. And a pro tip from our sources specifically for El Paso, its housing market is really affordable. Median prices are often way below the national average, which makes it, well, a pretty strong option for both renting out properties and holding them long term.
And that affordability raises an important question. How do you actually finance these goals? That brings us to step two, securing financing. And it's different for investment properties versus your own home. You'll typically need a higher down payment, think maybe 20%, sometimes 25%. Lenders see it as a bit more risk. Ideally, you want a credit score of 680 plus. That helps get better rates. And yeah, the interest rates themselves are usually a little higher too. Now, lender options. Locally in El Paso, GECU is a solid credit union choice for conventional loans. But there are also non-traditional lenders like Visio Lending. They're interesting because they actually consider rental income for qualification. Great if you're building a portfolio. And of course, the big national guys, Rocket Mortgage, Wells Fargo, Chase, are there in the game too. Plus other non-traditional options like Kiavi, Lending Own, lots to look at.
That's a really crucial breakdown on financing. Okay, so you're pre-approved, you know what you can afford. Now for step three, research the market. Unlock the right location. And here's where it gets really interesting. It's not just any property. It's about finding places where demand is high, consistently high. You want spots where properties rent out quickly, so think areas near major employers, like the Fort Bliss space, huge there, or near UTEP, the university, always demand around schools. Our sources also flag those growing subdivisions out in Horizon City and East El Paso, lots of growth, lots of potential tenants, prime spots.
Exactly. And once you've zeroed in on those promising areas, step four is vital. Run the numbers. This isn't just play with a calculator. It's figuring out if this property will actually make you money. You absolutely have to calculate projected rent, realistically. Then list out all your monthly expenses, mortgage, taxes, insurance, and don't forget maintenance and vacancies. Budget for those. Then you figure out your cash flow, rent minus all those expenses. And finally, your ROI, your return on investment. How much profit are you making for the money you put in? Underestimating costs. That's a huge red flag.
Right. Critical stuff. So you found the numbers, it looks good. Time to act. Step five, make a smart offer. Craft that winning offer. And it's not just about the price tag, is it? You can negotiate for seller credits, maybe towards closing costs, or for specific repairs found during inspection. Speaking of which, whatever you do, do not skip the home inspection. That's your safety net. It uncovers issues that could turn your investment into, a money pit.
Yes. And if we connect this all to the bigger picture, it's about a sustainable strategy, right? Not just one deal. Which brings us to step six. Decide on property management. Big choice here. Do you manage it yourself? Save on fees, but it takes time? Or hire a pro manager? More passive income, but costs about 8–10%. It really changes your involvement level. And then step seven is all about how you grow your portfolio. Keep things moving. You can refinance later once you've built equity, pull cash out, or leverage the rental income you're already getting to qualify for more loans, or even partner up with other investors for bigger deals. Opens up different kinds of opportunities.
So what does this all really mean for you, the listener? Buying investment property, it's definitely about playing the long game. It's a marathon, not a sprint for building wealth. And the good news, in specific markets seeing growth, like El Paso and Horizon City, that opportunity is genuinely there if you approach it right with a plan.
Right. And beyond these 7 steps, beyond just the how-to, the real power, I think, is understanding how to strategically use information, use your assets. It's about empowering yourself to build not just, a few rental properties, but lasting financial independence, your own unique wealth story, something that really transforms your future.